What is pushing gold to record heights? Many accredit central banks and money managers, but it turns out small investors are adding to the momentum, underscoring the broad appeal for an asset long prized as a store of value. Economic uncertainty means you have to keep up with what's happening. Make sure you subscribe and we'll keep you in the know. The resilience of gold right now remains a sight to behold. Gold surpassed the $2,400 per ounce level last week for the second time in about a month. That means through the end of last week, the price of gold appreciated 18% since the end of February. Central banks are one especially devoted group of gold investors, acquiring a record high of 1,081 metric tons in 2022 and nearly matching that total in 2023. And recently we learned that central bank gold demand in the first quarter of this year totaled 290 metric tons, the most in any calendar year first quarter on record. Professional money managers have been getting in on the Gold Act as well. Recent analysis by Citibank found that more than 80% of institutional asset managers overseeing more than $18 trillion in assets own gold right now. The current gold boom appears to be due to much more than a sharp increase in demand among institutions. In a recent article, the Wall Street Journal contends the notable uptick in precious metals demand can also be attributable to the small, everyday investors. Among those everyday investors is Eric Vasquez, a power company lineman in Florida. Vasquez told the Journal that he owns, quote, a lot more gold than most financial advisors would recommend. His reasons for owning gold include fiscal irresponsibility on the part of the government, as well as the volatility and unpredictability of financial markets. Vasquez also told the Journal he insists on owning his gold in physical form because it gives him the greatest peace of mind. I just feel like I want to take as much of my own livelihood, my own safety, my own family safety into my own hands. Another person profiled by the Journal article is Barry Kitt, a 69-year-old former hedge fund manager. Despite his long-standing professional relationship with mainstream financial instruments, Kitt told the Journal he also prefers owning his gold in physical form. Explaining his aversion to owning gold in other forms, the longtime money manager said, "You don't own gold, you own a piece of paper. I want to own it. I want to know it's mine." There's evidence that accumulation of gold by individuals has been trending upward for some time. The Journal points out that global demand for gold bars and coins, typically bought by individuals rather than institutions, the paper notes, swelled by nearly 40% from 2019 through 2023. George Milling Stanley, chief gold strategist at State Street Global Advisors, said there has definitely been a gradual accumulation by just about all classes of investors, institutional and individual investors themselves. Milling Stanley recently detailed the fundamental reasons why so many investors, from the largest to the smallest, are turning to gold. Over time, gold can help to enhance the returns of a properly balanced portfolio. And whether gold is going up, down, or sideways, it will also help reduce the volatility of your portfolio. A big wave of demand has pushed gold to record highs. Analysts agree that central banks, governments, and the largest institutions can be attributed for much of that demand. But something new is going on. Investors like you and me are now getting in on the action. I wonder why there's so much demand. That's why I suggest you take the time to learn more about what's really going on in the economy by attending our exclusive one-on-one web conference at AugustaPreciousMetals.com/webconference.